Welcome to the Deep Dive. Today we're going deep on Future FinTech Group Inc. You know it as FTFT. And we've got a whole bunch of articles and market data, even some legal stuff to get through. Our mission, well, to help you understand this company, all the ins and outs, the good, the bad.
A company with a pretty interesting history, I'd say.
Oh yeah, for sure. Future FinTech. You hear that name and you think algorithms and crypto, right? But they didn't start out in finance at all.
Not even close. Back in '98, they were cyber public relations, and get this, a fruit juice company.
Fruit juice.
Yeah, through a reverse merger in 2008. It wasn't until 2017 they became Future FinTech Group. That's when they jumped headfirst into fintech.
So from juice to FinTech, that's a wild ride. So what do they actually do now? What are they offering?
They're trying to be a big player in fintech. Lots of different areas: supply chain financing, asset management, even cryptocurrency mining. And they've got some blockchain stuff too, like Chain Cloud Mall. It's an online shopping platform using blockchain.
Chain Cloud Mall, like an Amazon but with blockchain. What's the point of that?
Basically, yeah. It's supposed to make online transactions more transparent and secure. Every step gets recorded on the blockchain, and that could be really good for supply chain management, which FTFT is super into.
Got it. Starting to get the picture now. But before we get into all that, let's talk about the CEO. Who's the brains behind this whole thing?
That would be Shanshan Huang. And there's been some controversy around it.
Controversy. Fill us in. What happened?
Well, back in 2024, the SEC filed a lawsuit against him, accused him of stock manipulation, definitely raised some eyebrows about his leadership and the company's governance in general.
Stock manipulation, that's a big deal. Did the lawsuit hurt the company?
Oh, yeah. It created a lot of bad press. And probably scared off some investors. And that's not the only legal problem they've had. In 2023, they had to settle accounting fraud charges, paid a $1.65 million penalty.
So we've got a CEO accused of stock manipulation and a company with a history of accounting fraud. Not exactly a great first impression for investors. But let's try to look past that for a second and focus on their numbers. Anything in their financials that gives us some hope.
It's a mixed bag, to be honest. Their revenue was decent, about $35 million, but they're still losing money overall, which is obviously not great.
Losing money, never a good sign. Why are they having so much trouble turning a profit?
One problem is their profitability. Their gross margin is pretty good, about 33%, but their operating and net margins are way in the negative. Means their expenses are eating up all their profits.
So they're making money on the products, but something's off with their spending. What's driving those negative margins?
It's probably a few things. They've been buying up a lot of companies investing in new technologies, maybe some inefficiencies in how they run things. Remember, they're in a really competitive industry. Staying ahead costs a lot of money.
Trying to grow and innovate, but at a cost. Is it working, though? Are they seeing a return on all that investment?
That's the big question. Those operating losses and negative cash flow make you wonder if they're spending their money wisely. They've been acquiring companies, raising funds through stock offerings, but it hasn't led to consistent profits yet.
Okay, so the financials aren't looking so hot. Losses, negative margins, questions about their spending. Any other warning signs of their financial health before we move on to market sentiment and ownership?
Well, their earnings have been all over the place the past few years. Profits, one-year losses the next. Makes it hard to predict what they'll do in the future. Raises questions about their long-term stability. And they haven't paid any dividends either. Something else to keep in mind.
Yeah, that's definitely something to consider for potential investors.
Yeah.
So we've got a company with a fascinating history, even if it's a bit messy. They're in a fast-growing industry, but their financials and legal issues are definitely worrisome. Now let's move on to Chapter 4 and see how the market's reacting to all of this.
Let's talk market sentiment. How's the market feeling about FTFT? To be honest, not so great.
Yeah, I bet those SEC charges and their crazy financials aren't helping. What are investors saying?
It's mostly negative. Their stock price has been dropping for years, and it's way more volatile than the market average. Investors are nervous, and they have a right to be.
Definitely not for the faint of heart. What's making investors so uneasy?
Well, besides the legal stuff we talked about, their long-term strategy is a little unclear. They're involved in so many parts of fintech: supply chain financing, asset management, cryptocurrency. It's hard to tell what they're really good at and where they have an edge.
Sounds like they're trying to do too much. Maybe spreading themselves too thin.
It's possible. And to make matters worse, there's almost no analyst coverage on FTFT. No price targets from the big firms. Basically, Wall Street's not paying attention.
Ouch. No analyst coverage means no interest from big investors. Like, they're practically invisible.
Exactly. Big investors want sure things in fintech. and FTFT just hasn't earned that trust yet. Let's move on to ownership.
Okay, ownership structure. Always an interesting one. Who holds the power at Future FinTech?
This is where it gets a little weird. The info on institutional ownership is all over the place. Some sources say it's low, around 2.54%. Others say it's even lower, like 1.42%.
That's strange. Why such a big difference? And either way, that's really low institutional ownership.
Yeah, it's not normal. Could be different ways of measuring it or different reporting rules.
Hmm.
But it does show that big investors aren't exactly lining up to buy FTFT.
Right. Not exactly a favorite. What about insider ownership, though? How much of the company do the people running it own?
That's actually pretty high, 30.88%.
Huh. So the people in charge have a lot riding on the company. Could be a good sign, right? Shows they're invested in its success.
Maybe. But remember that SEC lawsuit against the CEO for stock manipulation? Makes you wonder about their motives.
True. Can't ignore that. High insider ownership can go both ways. Could be confidence, but also potential for conflicts of interest, especially with the CEO's legal problems.
Yeah, exactly. Adds another layer to the whole corporate governance issue at FTFT.
Okay, so low institutional ownership, high insider ownership, and a CEO with some serious allegations. Complicated power dynamics, for sure. Before we get to the SWOT analysis, can you talk more about corporate governance? What's FTFT doing to address these concerns?
Well, they have made some moves to improve things. They formed an independent committee to look into the SEC allegations and brought in an outside consultant to help with compliance.
At least they're acknowledging the problem and doing something. But is it enough to win back investors? Probably too soon to tell.
It's a step in the right direction, but trust takes time. Investors want to see consistent ethical behaviors from leadership before they'll feel comfortable again. Ready for that risk assessment?
Yes, let's dive into the SWOT analysis. Give us the strengths, weaknesses, opportunities, and threats facing future fintech. Okay, SWOT time. Strengths first. What's working in FTFT's favor?
Well, they do have some things going for them. Experienced management team, lots of experience in finance and tech. They're definitely putting a lot of effort into innovation too, especially with blockchain and digital payments.
Brains and tech got it. But we've also seen some pretty big weaknesses. What are they struggling with?
Their biggest problem is probably name recognition. They're a small fish in a huge fintech pond. And their inconsistent financials aren't helping. Plus, all the regulatory stuff definitely makes investors nervous about their future.
So brand recognition, financial stability, regulatory issues, all big challenges. What about opportunities, though? What's out there for them?
Well, they're in a booming industry, that's for sure. Blockchain and crypto are exploding, and the demand for decentralized finance is growing all the time. Plus, they're focusing on emerging markets. That could be huge if those economies keep growing.
Big potential, but big risk, too. What are the biggest threats FTFT is facing?
Competition. It's brutal out there. They're up against giant companies with tons of money and startups with cutting-edge tech. And the regulations for fintech are changing all the time. That makes it hard to plan and stay compliant. Plus, there's always the risk of cybersecurity threats. A data breach could wreck their reputation and scare away investors.
All right, so a real mixed bag here. Back to a question we asked earlier. Would Warren Buffett invest in Future FinTech Group?
I highly doubt it. Buffett loves companies with a long history of profits, strong earnings, a clear competitive advantage. FTFT doesn't really have any of those things.
Their financials are a mess.
Yeah.
And that accounting fraud scandal, Buffett wouldn't touch them with a 10-foot pole. He's all about ethical leadership and good corporate governance.
Right. Buffett looks for companies with what he calls a wide moat, something that protects their profits in the long run. FTFT. With all the competition and changing regulations, not so much.
So not a Buffett stock. But what about for the average investor? Is there any reason to buy FTFT?
It's a risky bet. High risk, high reward. If they can fix the legal problems, get their financials in order, and really use their technology to their advantage, maybe they could find a place in the market. But it's a long shot, and investors would need to be really comfortable with uncertainty.
Sounds more like gambling than investing. We've covered a lot today about Future FinTech Group. Their strengths, weaknesses, the opportunities, and the threats. But the decision to invest or not is up to you. Do your research, weigh the risks and rewards, and decide if FTFT is a company you believe in.
And just a reminder, everything we talked about today is for educational purposes only. It's not financial advice. Always do your own research before making any investment decisions.
Couldn't have said it better myself. If you want to learn more about Future FinTech Group, we've got links to all our sources in the episode description. And if you want more insights on finance and technology, make sure to subscribe to the Stock Analytics AI YouTube channel.
We'll be back with more deep dives into exciting companies, breaking down the data and trends that are shaping the market. Until then, happy investing.